Hi guys, welcome back to the channel. You know what time is this? Today it has been a while. It has been a while since I made video. It has been a while since I've traded. Pretty much I've been out all August long. It's just learning lesson from trading. Prior to the first week of August, I didn't know how crazy and messed up this month of August is usually, especially for indices, how price action, is a little bit crazy. So about halfway through August, I stopped trading, and I've been kind of like, using the whole month to refocus, reassess myself, reassess my trading, relearn things from ICT mentorship, and putting those things into action, and then preparing to attack the second part of the year, which is gonna be, I got a lot of stuff that I'm working on. I prefer not to say what I'm working on yet, because there's like some kind of a jinx when you do your work in silence, it's working, and then you put it out, you are like, oh, you get all this kind of pressure. So as you can see, the setup has changed a little bit. I kind of like flip stuff around. So this is how the new video is gonna be. Today's this video, I want to talk about ICT daily bias, how to determine daily bias, and how to use them properly in your trading. This is kind of like a backtesting session with me. Those are backtesting analysis I want to do for myself, and I would just like to make a video, because I'm relearning ICT. And one of the emphasis of the 2022 mentorship was using higher time frame analysis to determine your bias before you start trading before you start doing your short-term trading or scalping or whatever kind of trading you do. If you are a position trader, you can use daily, weekly, but if you're a scalper, you still need the higher time frame analysis. What you are looking at right now is the daily time frame of mini S&P, and I'm taking you guys to the weekly time frame. On the weekly, it has been quite a lot of this past couple weeks. Pretty much this has been August, and we're at the last week of August. And as you can see here, this is a monthly fair value gap. And as you can see, we drop into the monthly fair value gap all the way to the consequential portion of the fair value gap, which is the 50% of the fair value gap. And price rejected, closed bullish last week, and then it's been bullish this week as well. At the beginning of the year, I was kind of like more focused on short-term trading and all this kind of stuff, that I forgot the impact of higher time frame analysis and how it can impact your trading. Basically, everything is based around that. So I haven't been trading, but I've been looking at the market, generally like looking at what it's doing, mainly on weekly and daily. And as last week closed, it was a pretty messed up week, because it was going both ways around the market. So it traded back into this old weekly fair value gap, and what it didn't even close below the 50% of the fair value gap, which is here. Yes, it is an old weekly fair value gap, which coincides with a daily fair value gap. I don't know if there's anything that goes around with that, but usually when you have a daily fair value gap that is exactly the same as a weekly fair value gap, those tend to be strong. We can see the first reaction from that in June 26th, and then we are seeing the same reaction here. So it bounced once, it tried to close below it, but it didn't. And then it has spent whole week kind of like being indecisive, going up, going down. We trade back into this fair value gap there. It trade back below what level was that? So it traded back into this fair value gap, then rejected aggressively, and then the next day we can see this is a clean candle. Like, let me zoom in a little bit. This is a very clean candle, and just a strong rejection. It opens here and closes right at the high of this fair value gap. Then the next days, it opened, it trade high, and then slammed back down into that old weekly fair value gap, and it closed Friday bullish. Basically, if you don't understand short-term trading, if you're not a good scalper, you hurt yourself in this kind of market because there's no precision. It's kind of like going both sides of the market. You're like, okay, is it going up or is it going down? It opens, you trade up. If you were bearish at that time, you can use that fair value gap to trade lower. But on the next day, where your expectation will be is that, okay, we may see a continuation lower to take out this sell side. It didn't. It just opened up, slammed up. It opens and slams up. So probably that day, if your bias is bearish because of this fair value gap, you're gonna probably take some losses. This is where risk management is important. You will take losses. It's part of the game. And understanding that, okay, the thing that we are doing, the method that we're using, although it's precise, if it is read well, it is not bulletproof. It doesn't mean that you're not going to take losing trade. So you will probably lose here next day because if you already close this fair value gap, your bias of being bearish has already evaporated. Now you're going to wait to see how price is going to react. So where are you going to look at? You're going to look at this daily order block, seeing the reaction from the daily order block on the next day. It may give you a confidence to trade, but on Friday, when you want to be bullish again, it's just the same thing. It bounced, it did trade lower, but it couldn't. It take out this low, it take out Thursday low, and then it took out Monday's low, but it couldn't take out this low, which was a low that we technically wanted to see break, maybe close below the mid-range of the fair value gap, which it did not. Now, going into this week, how should we look at price? On Friday, it take out Thursday lows, the previous day low. Usually, price goes for liquidity. It goes for old lows and hold highs. When I was watching ICT 2022 mentorship on the daily biases, it said to look on the weekly to determine. You don't have to predict where the week is going to close at. However, you can get a sense of where is that weekly candle likely to go. So as it close here, the likelihood of that candle after this week going lower is it's not that high. At this point, we are moving from a monthly fair value gap close to its consequent encroachment. We're having an aggressive rejection. We couldn't even close in the mid-range of this fair value gap. The likelihood of this candle continuing higher to take out buy side, because we already take out this low, is high. We may aim to take out previous week low. So you might go in the market with a bullish bias, and that's what's gonna be. So Friday takes out Thursday low. Where we're looking at, we're going to look to see what Monday does. We're not going to try to trade Monday because we know that we have this daily fair value gap here, which when you look at this daily fair value gap, the idea, because you are bullish, you are going to wait. You position yourself in the sense that if we trade through the 50% of this fair value gap and then we comes in it once again, we will use this fair value gap as an inversion fair value gap, targeting the previous day high. And then after that, we can see if we can target this high, back into this fair value gap, back into this liquidity void, and back above this buy side. That's kind of like the idea, framing the trade. It doesn't necessarily mean that price is going to get there. However, it is very much likely to get up to this to this buy side after it trade through this fair value gap, because we are traded through it, close below, trade once again, consequent encroachment. As you can see, it will close right here at 50% of that fair value gap. So ideally, on Monday we did close up here. You wouldn't be trading Monday, but you will be looking at market and seeing the reaction. So what you want to see on Tuesday is a measure of run on of a stop hunt, because if you are bullish, you want the 9:30 opening to open. Run stop hunts, basically power of three manipulation. Well, power of three, which will be opening, manipulation, expansion, and you find a fair value gap in here, and then you get into the continuation of the market. So with that in mind, if we were to trade today, which as a disclaimer, I did not trade today. I monitor the market, I see what's happening. I'm not giving financial advices. This is just speculative work and understanding of market price. So just quick disclaimer. So if we are looking at today, which is Tuesday, with that intention in mind of opening, manipulation, and then expansion, because we are bullish on base of the weekly candle, base of the daily candle, and base of a retracement into that daily fair value gap as an inversion fair value gap, we can position ourselves to wait for this measure of stomp hunt to happen before we get in sync with market. So if we are looking on the 1 hour time frame, if you are a short-term trader, this is your fair value gap. Already expanded, take out sell side here, trade fair value gap, trade higher, trade once again to a fair value gap, and you can enter here, look for 50%, look for price to trade back to the 50% of this fair value gap, which is going to be here, and you enter, you set your buy limit at 50%, the stop loss right here, and you aim for that high, the daily high, which is going to be here. What does it take? It's a 3 to 4 hour trade, which is a good trade. I wish that in the future I'll be able to take trade like this, because I know myself as a trader. I as a trader, I would say that I'm very emotional and sometimes impulsive. So I'm working on that part. That's why the break from the month of August, working on trading psychology, understanding myself, understanding my rule, putting trading plan in place, learning about how can I develop better habit to trade better, etc. But if you can get one of those a week, is good. Like if you're someone who is risking 0.5% of your account, that's close to 2% that you make there. That's enough for 1 week of trading. And if you have a large capital that you're managing, that's good. That's good enough. So that's kind of like, that could just be your model right there. Could just be, look for all those fair value gap, look for the confirmation on the higher time frame, and you take your trade on the 1 hour time frame, which is going to take a couple hours for the trade to complete. 1, 2, 3, 4 hours. You can just leave the trade in, put your stop loss, you can go. By the time you come back, either you hit your stop loss or hit your take profit. As long as you are practicing good risk management, you should be fine, because you know what you are risking. It is fine that you lose, and you will get it back on the next trade. You don't have to be right on every single trade. Now, this is how I trade, which is a high frequency scalp trading system. So we still go from that same premises. What we're looking for, bullish setup, and in this case, the time that we want to get involved with the market is anywhere after 9:30, which is opening belt in New York. Then we don't trade lunch hour, so we kind of like delineate the times that we'll be in the market and the times that we're not going to be in the market. So it's going to be between 9:30 to 12, and then between 1:30 to 4 p.m. New York time. Now, we do that, we delineate the market, we know that we are here into an inversion fair value gap. What are we going to look at? We're going to look for the consequent encroachment of that inversion fair value gap. As we are starting the day, We will look 1 second encroachment right in there. We'll see. We'll keep an eye. We'll analyze how price react to that 1 second encroachment, and if after the opening belt is going to give us something. So at 9:30 we open here, which is, so at 9:30 this is where we open now. Prior to that we do have, I don't know if you guys watch ICT One Setup for Life, but he has here's how you determine the high and low of the session. So if price open at 9:30 a.m., where do you determine the low of your session? What we do, if we look here and see how far are we from previous day highs and low, we are bullish. We're not looking to take a short bearish trade. Here we assume that higher time frame is going to give us bullish setup, which means that we are not going to look for a run on PM session buy side and to look for the sell side to trade. We are going to look to set ourselves with market so that we can take out high probability buy side trade. In that case, we want a certain measure of retracement and a run on sell stop before it goes up. So if we are looking here, we can see that between 1:30 previous day, which is here, and 9:30, we have opening 9:30. This is closing at 4, right? This is a high. This is a low. We want buy side. We want bullish setup. There are two things that can give us bullish setup. Number one, if we open and we are close to the sell side here as being bullish, and then we take out sell side. So for example, if it opens at 9:30 somewhere here, it trade below, which will be the judo swing, close back into this opening range gap, right? If it does that at 9:30 and then shift in structure, fair value gap, then that will be a good setup to trade, right? But we're away from that. We're not looking for that anymore. We want to make sure, we want to see where price opens at 9:30. It opens at 9:30, it's not near close to that low. It is very close to the high and it's touching a fair value gap, and as it opened at 9:30, it kind of like it's already shot up. What we're gonna do, because we're away from the PM session high, we're gonna look for the London session highs and low. Watching ICT 2022 mentorship, he stated that the session high, well, the highs and low prior to 8:30 are the one that you should look at first of all before he talks about the one setup for life. So in this case, at 8:30, we are here. We take out this sell side liquidity. You are not gonna find this trade on 5 minutes. That's why we go down on the lower time frame. So when we go down on 5-minute time frame, we have 8:30. So 8:25, 8:30. We just take out London session low. So this is London session high here and London session low. We take out London session low. Does that mean that you're going to buy? No, you're not going to buy because that's not the trade. You want to take your trade at 9:30. 9:30 or anything after 9:30, 9:30, 9:50 with the macro, 10 to 11 with the 10 to 11 with the silver bullet, and you wait for PM session. The 2022 mentorship was pretty simple, and the idea is to wait for a rate on sell side, a shift in market structure, fair value gap, price stay above 50% of that fair value gap, and then the target, which was previous day high, which was here. So in this case, we had the rate on sell side here. Then we do have a shift in market structure here. So 9:30 opens, we trade, we shift market structure, which is breakout structure here, shift the market structure, and we have a fair value gap in here that I'm gonna guess comes in at 10:30, at 10, which is 9:55, the macro. And then the second entry, which is in the second fair value gap, comes in here at 10:10, which is a silver bullet, and it trades up into it at 11:25. Exactly at 12 a.m. we have the last high candle before the consolidation. So that could just be the trade for the day. As you could trade on 1 hour, you take your trade up there, or you could trade using this. It just gives you more confirmation, better confirmation. And once price get up here, you're out for the day. It's just that simple. You don't have to complicate it. So, and then one thing that I was looking at the backtest that was supporting price was SMT Divergence. We can see that between Friday, August 18th and August 25, E-mini S&P was making lower high, Nasdaq making lower high, but the Dow US 30 was making lower low, which could be an indicator, because as we are bullish, we are getting into the week being bullish. We haven't traded Monday yet. This was last week Friday. You can look Friday here, and you can see that at Friday we do have lower high, lower low, and then Monday we are seeing continuation of bullish, and then we do have a fair value gap here on the 1 hour. We do have a fair value gap here, fair value gap here. What does that mean? This, because we are bullish and we have an SMT divergence that is supporting the claim of price going higher, that gives us more confidence to take those trade on the 1 hour time frame, or on the 15-minute time frame, or on the 5-minute time frame. You can even go all the way to the 1-minute time frame. You can start by go on the 2-minute time frame. We are gonna go back to that sweep on London session low. So here is London session low. As we sweep London session low here, we look for shifting market structure to see if we have a shift in market structure that will offer price higher so that we can trade on. Remember, this is a consequential encroachment of the inverted fair value gap. Once we trade through that consequential encroachment, we do have a shift in market structure here, and we have a fair value gap right prior to that. So if you look clearly, here is the breakout structure of shifting market structure for intraday, shift shift of price. So here we have the PM session low. We take out this sell side. We have the shift of, because this, if you are a risk taker, you could consider this as a shift in market structure. Enter here, but then you have to sit down through all of the drawdown, and price being where it is. You don't want to be that. You want to see the shift. You want to see if it is willing to trade above the consequential encroachment of that inverted fair value gap. Once it does, it trade back up there, and then trade through to the fair value gap, and then start spooling higher. Spool higher. You see, look at price reaction. Look at how price react to the high of last London session. From the moment we get to the consequential encroachment, it's doing this. It bumps, it hit it, it comes back again. He has a name for that stuff. Immediate rebalance. It immediately rebalance from that. Just offer higher price, higher. You see, even here on 2 minutes, you have a better fair value gap in the macro. By the time it reached the London session high, it trade runs again back into that fair value gap after the second break of structure, and then it's pulling higher, 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 all the way here. And then it touched that, and then exactly at 12, we see some kind of retracement and consolidation. Here, it could be, this just could be if you are open to greater risk in your trade, right? Because it's gonna be tight stop loss, and price can come and take you out before you move low and move higher. So you kind of just want to, you have to be open to that kind of risk, right? So if you were to take here, you can just aim for that high. Price get to that high, you get your 3R. It doesn't take you much, about 30 minutes for the trade to be completed. Or you can take your partial, and then you leave some runner, and that's basically the whole trade. 9R in one freaking day. This is how I'm looking at. I want to read price and how I want to manage my trading account, my challenges, and all that kind of stuff. I'm trying to get to that level so that, number one, I don't risk too much on trades that will kind of like make me afraid of holding the trade. And number two, that I'm disciplined enough to not take any kind of shitty trade or trade when I'm not supposed to trade. Like last week, understanding that, okay, this is not the time to trade with where we are. And then understanding that, okay, this week we are having a better read on price. Weekly is getting somewhere, it's likely to go somewhere. Daily, we are supporting the price. Money came in, we trade above a fair value gap. It could be an inverted fair value gap because of the weekly, because of the likelihood of price to go higher. I'm gonna go down Tuesday to look for a higher price, but I will always anticipate a measure of stop hunt before I get my entry, which in this case, the stop hunts came in during London session highs and lows, because it was so far away from PM session lows. You can see that at 8:30, 9:30, we are not even close to PM session, right? So by taking the London session low, you aim for the London session high, and then the previous day high, which is here, and then you reach that at exactly 11:30. Continue higher. Usually, what ICT say when it takes the buy side is gonna continue a couple of pips be above before it start retracing. And then here we have the PM session, which also could be traded. If you look at the PM session highs and low, the low here is here, and then this is a high. Because like that, we're not bearish, so we're not going to take any bearish trade on it. And it's just looking like consolidation, right? It just consolidates all the way to 4 and then close for this new day. So yeah, I just want to make this video real quick. I think it would be a fascinating video. And yeah, like I said, promise backtesting session with me, backtesting ICT model in the market, and analyzing where we're at in the market and where we're going next. It has been a minute, so I just wanted to make a video to keep you guys updated, to keep the channel going. It's not that easy, but we're figuring it out. It's not as easy as it looks, and it's just work, like learning, studying, getting connected to the market, etc. So if you guys enjoyed the video, drop a like in the comments, drop your bias for the week, or if you have any question on indices and anything like that, just put it down in the comment. Yeah, put it down in the comment. And then until next time, my friend, peace.